Imagine it's the late 1920s. You're in a bustling city like Chicago or New York. The economy is thriving and people are spending money freely. This period marks the height of the Roaring Twenties. The decade began with optimism following World War I. People secured employment in factories, businesses flourished, and wages increased. Banks were liberal in their lending practices and stock prices rose rapidly. However, there was a significant twist. The 18th Amendment had just gone into effect, making alcohol illegal across America, which led to the rise of bootlegging operations. So what did people do? They turned to bootleggers, smugglers who brought in illegal alcohol from Canada or elsewhere. These individuals weren't just criminals, they were savvy businessmen as well, and it wasn't just about alcohol. Bootleggers began dealing with other contraband items such as cigarettes and narcotics too. Let's talk numbers for a minute. Historians estimate that during the 1920s, bootlegging was one of the largest illicit businesses in America. It's hard to put an exact figure on it, but consider this. If you had $1 million in today's dollars back then, it could buy around 50 cars or more due to inflation and changing car prices over time. Imagine bootleggers making that kind of money. Now, how did they do it? Bootleggers used every trick in the book to stay ahead of law enforcement. They bribed police officers and politicians, influenced court decisions, and even established their own networks for protection. It was like a real-life game of cat and mouse on the streets during the Prohibition era. One famous bootlegger named Al Capone made millions by controlling Chicago's liquor trade. He wasn't just about booze either. He ran gambling dens, prostitution rings, and more. Historians estimate that at the height of his power in the 1920s, his net worth could be equivalent to hundreds of millions of dollars in today's currency due to inflation adjustments. But the real story here isn't just about bootleggers getting rich. It's also about how Prohibition affected regular people. During this time, speakeasies, secret bars that operated illegally, became widespread across cities. These places were risky but popular. People would meet there to drink and socialize without worrying about Prohibition laws. Now imagine a time when you couldn't get a legal beer at a restaurant. That's precisely what occurred during Prohibition. People turned to purchasing their drinks from bootleggers instead. This led to the creation of a substantial underground economy that was extremely difficult to regulate. But here's another twist. While all this illegal activity was happening, Wall Street was also booming. People were investing in stocks like never before. The stock market seemed like an easy way to get rich quick. However, just like the bootleggers, it wasn't a risk-free venture either. By 1928, many people thought the good times would last forever. They borrowed money to buy more stocks, hoping for even bigger returns. But let's cut straight to the chase. In October of 1929, everything came crashing down. The stock market crash began on Black Tuesday, October 29, 1929, and it wasn't pretty. Now, why did this happen? Partly because people had invested heavily in speculative stocks without fully understanding the risks involved. It was a mix of greed and financial naivety. Sound familiar? But let's go back to the bootleggers for a moment. While the stock market crash of 1929 hit many investors hard, it didn't immediately hurt bootleggers as badly because they had cash stashed away from their illegal operations. So while regular people lost their savings in the stock market, these criminals continued to make money. Now, here's something interesting. Prohibition and the rise of bootlegging actually made some individuals extremely wealthy. However, this period also came with significant costs, including increased corruption, violence, and a breakdown in law and order across many cities. So let's step back for a second. Imagine you're living through this time. You see your neighbor losing their job due to economic downturns or business failures, while another neighbor becomes wealthy by selling illegal alcohol during Prohibition. It doesn't seem fair, does it? Now let's talk about one more big event from the 1920s, the Great Mississippi Flood. This was a massive natural disaster that hit in 1927, affecting millions of people across several states, particularly along the lower Mississippi River Valley. The flood destroyed homes and farms, but some bootleggers found ways to profit even from this disaster. During the Roaring Twenties and Prohibition era, bootleggers often took advantage of various situations to set up their illegal operations. They might establish makeshift distilleries in remote or flood-prone areas where law enforcement presence was minimal, or they could purchase property at lower prices after natural disasters struck. While these criminals profited from the illicit alcohol trade, many regular citizens faced significant hardships and struggled to make ends meet during this period. So here's a question for you. Was Prohibition really worth it? Did outlawing alcohol in the 1920s actually address the problems associated with excessive drinking, or did it create more issues than it solved? Let's circle back to Wall Street for a moment. During the 1920s, particularly during the period known as the Roaring Twenties, many people thought buying stocks would make them rich overnight. However, this optimistic sentiment ended badly with the stock market crash in October of 1929, marking the beginning of the Great Depression. Now let's compare this to bootlegging. Bootleggers were breaking laws and causing social disruption, but some managed to generate substantial illicit income. While many investors suffered significant losses during the stock market crash of 1929, bootleggers often kept their profits hidden away in secret locations. So what's the lesson here? Sometimes engaging in illegal activities may appear more profitable than legitimate options, at least temporarily. However, is this truly beneficial for society? Let's take a closer look at one last piece of history from this era, the rise of organized crime during Prohibition. We often think of Al Capone when we hear about bootlegging in Chicago. He was indeed one of the biggest players, but he wasn't alone. During the Prohibition era in the 1920s, numerous criminals amassed significant wealth through smuggling alcohol and operating illegal businesses. These individuals developed intricate networks, operated secret speakeasies, and employed enforcers to safeguard their operations. This period saw the rise of organized crime syndicates that thrived within the lawless environment created by Prohibition laws. But here's another twist. As Prohibition wore on, some bootleggers started seeking ways to mitigate their risks. So what did they do? They diversified into other illegal activities. Think about it. If you're already breaking one major law, why not break more by expanding into areas like gambling and prostitution, which were also often illegal during that era? This period saw the expansion of illegal activities such as gambling dens and prostitution rings, which grew in tandem with liquor smuggling during Prohibition. These illicit businesses thrived due to public demand for entertainment and vice. Now let's consider the economic context of the Roaring Twenties leading up to the Great Crash of 1929. When the market crash settled in late 1929, many people lost significant portions of their life savings. However, while Wall Street was reeling, organized crime activities, including bootlegging during Prohibition, continued to thrive. So here's a stark contrast. Bootleggers made money by breaking laws, while some investors faced significant losses during economic downturns, such as the Great Depression that followed soon after. It's like the criminal underworld thrived while parts of the legal economy suffered greatly. But let's not forget that Prohibition didn't last forever. In 1933, Congress repealed the amendment that banned alcohol. So suddenly those illegal operations had to shut down or go legitimate. However, by then many bootleggers were already well connected and wealthy enough to adapt their operations to legal industries. So what does all of this teach us? It's evident that Prohibition created a thriving black market that was difficult for law enforcement to regulate, leading to the rise of bootleggers and speakeasies. However, it also demonstrated how rapidly economic conditions can shift once restrictive laws are repealed. Now let's reflect on history. Consider the parallels between bootleggers in the 1920s and contemporary illegal activities such as cryptocurrency scams or drug trafficking. These operations often thrive on chaos and uncertainty, much like speakeasies did during Prohibition. But here's another twist. While these illegal activities might seem profitable in the short term, they come with huge risks. Bootleggers could lose everything if caught, and investors who followed risky stocks faced significant losses during the stock market crash of 1929. So what's the real lesson? It's important to understand the long-term consequences of your decisions, whether you're navigating historical events like Prohibition or making investment choices. Now let's look at another aspect of this era, the role of government during Prohibition. Although the law existed on paper, its enforcement varied significantly across different regions. In some areas, there were intense police crackdowns, while in others, the regulation was largely ignored. This led to widespread corruption and uneven enforcement. It's like a patchwork quilt where some areas are tightly controlled while others have gaps, making it easier for bootleggers to operate in certain regions with little interference. But here's another important point. When Prohibition ended in 1933, the government faced a significant challenge in rebuilding trust with citizens who had witnessed widespread corruption and lawlessness. It took decades of political and social reforms to regain public confidence. Now let's circle back to today once more. Consider how modern governments implement and enforce laws and regulations. Are these measures applied equitably? Are there loopholes or biases that advantage certain groups over others? It's a reminder that even the best intentions can go wrong without consistent and fair enforcement. Just like in the 1920s during Prohibition, when regulations failed to curb illegal activities such as bootlegging, today we need to ensure our systems are equitable and effective for everyone. Now let's take a closer look at how Prohibition affected everyday life during that time. Speakeasies weren't just illegal bars, they became social hubs where people could escape the monotony of daily life. Speakeasies provided a venue for people to socialize, dance, and consume alcohol during the Prohibition era without fear of legal repercussions. However, this came with significant risks such as police raids, violent confrontations, and health hazards from consuming poorly made or adulterated alcoholic beverages. It's like a double-edged sword, enjoyable but dangerous. Now let's compare that to contemporary nightlife. People still seek out underground clubs or secret speakeasies for similar reasons, such as the allure of breaking the rules while having fun. However, this behavior comes with its own set of risks and uncertainties. So here's another question for you. Is seeking temporary excitement worth the long-term risks? It's something to consider when looking at both speakeasies from the 1920s and today's underground venues. Now let's revisit some financial lessons from history. During the 1920s, often called the Roaring Twenties, many investors believed they could achieve rapid wealth through stock market investments. However, this period eventually led to a significant crash in October 1929, which adversely affected most investors. So what can we learn from this? It's important to understand that get-rich-quick schemes often come with significant risks. Whether it's day trading or investing in cryptocurrencies, there are always potential downsides that people sometimes overlook. But let's not forget the other side as well, bootleggers who made fortunes breaking laws during Prohibition. They faced a different kind of risk. They could lose everything if caught. However, for many, this high-risk venture seemed worth it compared to the steady but slower path of legal business. So what does all this teach us about balancing risks and rewards in finance? It's crucial to carefully evaluate both the potential benefits and drawbacks before making significant financial decisions. Now let's circle back to one final lesson from Prohibition, the importance of adaptability. Bootleggers were adept at adapting to changing circumstances. Whether it was moving their operations during raids by law enforcement or transitioning into other illicit activities, once the sale and distribution of alcohol became legal again with the repeal of the 18th Amendment in 1933. This adaptability was key to their success, but it also demonstrated how rapidly circumstances could shift. Therefore, whether you're an investor or a business owner today, maintaining flexibility remains essential in an ever-changing environment. But here's the catch. Being overly flexible can lead to risky decisions if not balanced properly. That's why finding the right balance between stability and adaptability is key. So let's end with this thought. While bootleggers appeared to thrive during Prohibition, their success came at a high cost. They faced constant danger, corruption, and even personal risks. When Prohibition ended in 1933, they had to shift gears again to stay relevant. This demonstrates that short-term gains can often lead to long-term consequences. Whether you're navigating financial markets or historical contexts like Prohibition-era bootlegging, understanding these trade-offs is essential for making informed decisions over time. And now, a quick reminder. This channel is financial education and history, not personalized investment advice. Always conduct your own research, consult with licensed financial professionals regarding your personal situation, and proceed with caution when making significant financial decisions. This has been the Money Files. This is educational and historical, not financial advice.